what's his name?
Bill
Bill
O'Reilly. Yeah.
O'Reilly, yeah.
Bill O'Reilly. Yeah.
That was like his famous thing. I didn't even know about that.
Yeah. I
Okay,
knew
let's
about
see.
Bill O'Reilly, and I also knew about that meme, and then I saw that they were the same thing.
I want to make sure that we're live. Are we already live? Is this...
Which one's the best?
Whoa. Yeah, is this it? Yeah.
Yeah. Okay. Cool. Cool.
Let's see. We live Rumble.
Yep.
We live. Yep. Okay. I think we're just live everywhere. So,
Sweet.
cool. So this is first live episode, believe it or not,
On everything.
on everything. But Garrett, maybe do your water bottle.
Oh, you can see it?
Yeah, on a little desk thing, yeah. Okay, cool. So this whole episode is about Bitcoin because it just hit 100K and it's an ode to Bitcoin. So,
Yeah, it's huge.
So everyone knows the number one book as a Bitcoiner to read is the Bitcoin Standard by Safadine Amos.
With a forward by Nassim Taleb.
Now the forward is actually from Michael Saylor.
Now it is?
It used to be Nassim Taleb because then he was like, oh, I don't like Bitcoin anymore.
Interesting. Because, yeah, the book was written in 2018.
Yeah, now the forward is Michael Saylor.
Well,
So,
that makes sense.
Yeah, but Nassim Taleb, he used to love Bitcoin. He thought it was like revolutionary, like the single most anti-fragile thing. And then he got spooked for some reason. I don't know why.
Maybe when the price went down,
Yeah.
he sang a different tune.
But Bitcoin Standard, I guess we could start the simple question. What is Bitcoin?
Well, do you want to answer it?
Well, essentially, it's digital money, and the immediate second question to that you have to ask is you go, and this is what the Bitcoin Standard addresses. You go, what is money?
All money now, nearly every form of it is digital. So that doesn't really differentiate it.
But
the
what
key standard of why Bitcoin is a unique asset or a currency is because there's a limited supply of it.
Well, yeah, and you may have not gotten to it in the Bitcoin Standard yet, but there's certain things that make money, good money, that makes money a good money, better than other monies.
Yes.
Because people obviously can use seashells and et cetera, et cetera. But what makes the best money, and it has to be like incorruptible, let's see.
I remember it. Yeah, I actually just read that part. Commerce started as just a simple trade and bartering system. I have this cow, you have that house. And so how many cows will it take to purchase that one house? The problem if you're just trading, if all your value is in a house or all your value is in one cow, say if I just want to buy one pair of shoes, then I can't subdivide my house so that I can buy that pair of shoes from you. And even if I theoretically could, I don't want 2,000 pairs of shoes to sell my house. It's not worth anything to me. So there needs to be a form of exchange which we're both mutually agree upon. This represents the value of the object I'm trying to purchase. It's a middle ground.
Yeah.
To trade one thing to another.
Because if you're bartering, if you want, say you're the Apple guy, and then there's the iron horseshoe guy. the iron horseshoe guy may want your apples, but you may not always want his iron horseshoes. So you need something as a middle ground to transfer value that holds the value across time and space.
Exactly. And that's why something like apples would be a very bad thing, because they're corruptible.
They're corruptible.
Seashells are fragile. Glass beads are fragile and easily replicated.
I'm pretty sure apples can be easily produced. Like you can have a vast supply of apples. And so...
And that's why gold and silver were used, across time, from the dawn of civilization.
Yeah, interesting about gold, it's an incorruptible element. I think it's the only incorruptible element.
I don't know.
Where it doesn't, I've read this, I'm pretty sure it's the only incorruptible element where it doesn't corrode.
Well, let's see. Is platinum an element? I think it is, isn't it?
Yes, I'm pretty sure. Take you back to chemistry class.
Why am I using Google and not Perplexity?
I don't know.
Google is an absolutely inferior product to Perplexity at this point for trying to find information.
Well, Perplexity uses Google, but it
scans
better.
Everything throughout Google. It uses Google to find
all the
articles,
stuff. Yeah,
pages, which it then derives the answer to.
One of the most...
Yeah, it's often regarded as one of the most incorruptible elements due to its remarkable physical and chemical properties. Yeah. However, it is not the only metal that exhibits such characteristics. But that's the thing with the reason why it's incorruptible is because of its molecular structure.
Yeah, which is like,
what it is. Like it's a perfect thing. Like, I'm not going to get too much into the chemistry, but I know it's something that certain elements, like what makes a great conductor, is that the electron chain on the outside has spaces for other electrons to move in and out of, or something along those lines. Whereas gold's just like a complete, compact, perfect
That's
element.
what people say. Gold is was God's money, basically. It's like created by the elements themselves. Yeah, read that part.
Gold is virtually indestructible in its pure form. It does not corrode, rust, or tarnish, and remains unchanged even at the exposure to fire. Yeah.
That, and it's the single most dense element relative to itself. Yeah. Meaning it has the densest atom to, like, for storing it. It's so dense in of itself, kind of thing. So it was like a good thing. But the problem with gold, there's problems with gold, is that it's not transferred easily.
Yes.
So if you have millions of dollars of gold on a ship, a pirate ship could raid your ship,
or the ship could sink. Which that's what I'm looking up right now, how much gold is buried at the bottom of the ocean. Because I'm pretty sure it's in the billions. There's approximately 20 million tons of gold dissolved in the world's ocean. Wait, but that's not what I'm looking for.
Sunken treasure, shipwrecks. Go down.
Yep.
60 billion.
$60 billion. Wow. Wait, let's look at this. This is actually really interesting. The SS Central America, which sank in 1857, held an estimated 15 tons of gold worth nearly $300 million today.
Wow.
The HMS Edinburgh, sunk in 1942, contained 465 gold bars, 431 of which were recovered in 1981. Damn. Yeah, imagine finding that.
So obviously,
this is the one. This is what I was looking for.
Okay.
The San Jose galleon, discovered in 2015, is believed to contain gold and jewels worth up to 20 billion.
Wow.
Imagine if that, and you know what's crazy? There's all kinds of, I don't know what you would call it, international laws regarding if you were to find a sunken ship like this with treasure in the middle of the ocean, depending on whose territory it's in,
You have to go to the government.
you have to report it, and you may not be entitled to anything.
Yeah,
Which to me is like, dude, I'm not fucking, I'm not going to anybody. Like, are you kidding me? Like, I'm
Count of Monte Cristoing it.
Absolutely taking that.
Burying it like on an island and like slowly pulling from it.
Yeah. Like maybe I'll give you 1% of what was found.
Yeah, the next thing is its weight. Okay. How much do you think $1 billion of gold weighs?
Let's look it up.
Yeah, Q perplexity.
Let's see. Okay. 23,000 pounds.
Yeah. Okay. So if you want to move $1 billion across time and space, 23,000 pounds, you're going to have to hire a vehicle that can support that much weight. A security team, A1 security team too, because it's like, oh, $1 billion. Like we want to, like pirates come in, we want to take this gold, like, rocket launcher, like bust the vehicle.
Yeah.
Some gold leaks out, like scoop it up, run away. And then if you have 23,000 pounds of gold, it's very noticeable. So everyone and their moms are going to ask, what are you doing with that $1 billion in gold? The government's going to want to know. Your neighbors are going to want to know. Shoot, I don't even think you know yourself what you're doing with $1 billion of gold and trying to move that.
Holding it somewhere.
Yeah. So those are the gold was great until it wasn't great. Until we went into a digital age and everything became digital and we separated the gold from the dollar.
That was before the digital age, though.
That was before the digital.
That was in, what was that? Isn't that Woodrow Wilson?
Well, yeah, because what they ended up doing is you would store the gold in the bank. So the person who held the 23,000 pounds of gold was the bank. And then they issued notes that's like one note of this equals so much of gold in the bank.
Which is essentially what the dollar was.
But because humans, ultimate power ultimately corrupts, because humans, gear towards corruption, they would issue more notes than they actually had gold in the bank.
That's right.
So what happened was there were bank runs where all the people would be like, I want to redeem my notes for the actual gold and repossess the actual gold. The bank would open up the vault. Sorry, we don't have as much gold as there was. So there's all kinds of issues with gold, and gold was the best form of money. And in order to get gold, you would have to expend a certain amount of mining effort and power to generate so much gold. So it actually has one of the main mechanisms of Bitcoin is proof of work. And gold kind of had proof of work because you had to expunge a certain amount of energy to mine a certain amount of gold.
Yes. 1933 is when, and that's really interesting because that's right after or during the Great Depression.
Yeah.
And so I think that's what actually caused the Great Depression, the bank runs.
Yeah.
Is that everybody en masse went to go withdraw their funds for their value in gold, and then lo and behold, whoops, we don't have it.
It became law that people had to turn in their gold. A lot of people ignored it. And when they turned in the gold, look up that. Was it law to turn in your gold? in 20th century, I guess. They did away with that like in the 80s or something like that, but at one point it was.
Wow. For a significant period in the 20th century, it was indeed law for U.S. citizens to turn in their gold. This occurred as a result of Executive Order 6102 signed by FDR on April 5th, 1933. Here are the key points about this law. Issued, blah, blah, blah. Required all persons to deliver most gold coins, gold bullion, and gold certificates to the Federal Reserve by May 1st, 1933. Exchange rate was $20.67 per troy ounce. Violation was punishable by a fine of up to $10,000, equivalent to about $235,000
in modern day.
Yeah. Violators could face up to 10 years in prison. Wow.
So
Wait, listen to this. These penalties were enforced under the Trading with the Enemy Act of 1917.
Yeah.
Wow. That's crazy.
Okay, and so you know what happened though? So go up to where it said it set it at $20 per ounce.
Mm-hmm. Yeah.
So yeah, whenever after they had a period where they were making everyone turn in their gold, and after they collected the majority of the gold that they were going to collect, they immediately issued more currency and inflated the price of the currency against the gold. So it was like within a week, it went from being worth $20 per ounce to being worth $40 per ounce gold.
Wow.
But you only had as much cash as the government gave you. Yeah, exactly. So they immediately robbed.
So effectively, they gave you $10. They
Yeah,
gave
yeah.
you half the value.
Yeah, they
Wow.
immediately robbed all the people who turned in their gold. And the wise ones were like, it's in a safe buried under my house. I'm not giving my gold to the government. What? Thought this was America.
Yeah.
Thought this was the land of the free.
That's really interesting. I never knew that.
Yeah, yeah. So then you had fiat.
Explain what that is for people who don't know.
Fiat currency?
Yes.
It's a currency not backed by anything except for faith and trust in the warships of the United States.
Mm-hmm.
So it's currency by dictation,
Yes.
meaning the government says that this money is worth something, and you have to believe that, and therefore it is worth something.
But you see, that's what to me I find fascinating and mind-blowing.
Yeah.
That essentially there's nothing behind this
No
other
gravity.
Yeah, exactly. There's nothing physically tangible behind the value of the dollar. It's in the ether somewhere. And especially now more than ever, where I think we looked this up the other day, isn't there something like $300 trillion digital dollars out there, worth in the world, whereas there's only maybe 10 trillion actual physical dollars. And so the money that we have today it's a code. It's a series of zeros and ones somewhere, where the Federal Reserve, whenever they, issue a package of however many trillions of dollars, $1.2 trillion during COVID, it's just a code somewhere. It's somebody entering in a series of keys, hitting enter, and then boom, there's now trillions of more dollars that just exist.
That's one of the biggest misunderstandings of Bitcoin. One of the reasons people get turned off by it is they say, I don't want a digital currency. Well, newsflash, your currency is already digital.
Exactly.
Your credit cards, your bank, online apps, all
Everything.
that is digital.
Stock positions. When you go buy, say, okay, today I want to go buy Apple stock. So what I'm going to do is go to my Hancock Whitney bank app. Where it shows me a number on a digital screen. And so then I hit transfer to my investment app. So then the money moves from one place to another. The number's just showing up on a screen on a different app now. And then I hit purchase Apple. And so then that money is just put into another different app. It's all a digital entity.
Yes. And the difference is Bitcoin is a superior digital currency.
Because there's a finite amount.
There's a finite amount. We're capped. 21 million will only ever exist. Satoshi Nakamoto, I think he mined like 2 million, and he threw away the keys to that address.
That's something that I don't fully understand yet. What does it mean to mine Bitcoin? I don't understand that.
Okay, so yeah, and that was one of the great inventions of Bitcoin, of where it solved something called the Byzantine general problem. That's something good to look up in Perplexity. Or say,
what is the Byzantine?
What is
problem?
the Byzantine general's problem? Yeah.
But keep talking.
But so yeah, it invented. No, honestly, cryptography has been going on since like World War I, maybe even before, maybe like Civil War type stuff. Like cryptography is incredibly.
What is
old.
cryptography?
It's like it goes all the way back to when we were trying to encode what the Nazis were relaying their war plans, trying to crack because they would communicate.
I know
their war plans over the radio, and that's what cryptography is. It's just trying to crack a code, basically. It's like where are they moving the troops so we can flank them, surprise attack them.
Okay, so let's see this.
Yeah.
The Byzantine general's problem is a game theory concept that illustrates the challenges of achieving consensus in distributed systems where participants may be unreliable or potentially malicious. It was developed by Marshall Pease, Robert 1982, to address the difficulties of coordinating actions among multiple independent parties in a decentralized environment. The problem: multiple generals of the Byzantine army surround an enemy city.
It's typically framed as a military scenario.
Yeah. Multiple generals of a Byzantine army surround an enemy city. They must decide collectively whether to attack or retreat. Communication between generals is only possible via messengers. Some generals may be traitors trying to sabotage the plan. The loyal generals must reach a consensus despite potential misinformation. The challenge lies in ensuring that all loyal generals agree on the same plan of action. A small number of traitors cannot cause the loyal generals to adopt a bad plan.
Blockchain technology,
cloud computing.
Yeah. So basically, at its core, what Bitcoin is just a ledger. And I'll get into mining to explain that, but you got to say Bitcoin in its simplistic essence is just a ledger. It's an account track. There was ledgers in ancient Egypt where merchants would tally up who they sold, yada, 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 who they owe money to at the end of the day. What do banks do with their digital money at the end of the day? They settle their accounts. We've spent this much. We owe this much. You owe me this much. All the accounts settle. So a ledger.
And this is all public data.
All public data. Yeah.
Where would I go to find that?
That's the blockchain.
Where would I go if I just want to look at it right now?
Go to memepool.space.
What is that?
Or MEM.
Pool?
No, not E. Just
MEM.
Mempool.space. There's multiple of them, but this is the most popular one. And you can see it live. This is confirmed blocks.
Maybe you should pull that up on your computer so everybody can see it.
Yeah, maybe. I don't know if...
Would it work?
Yeah, let's see. So yeah, let me show it too. Yeah, let me see.
Boom.
This is generally it. So over here you have blocks waiting to be confirmed. These are confirmed blocks. Oh, one just got confirmed. You saw it live, confirmed live. So what it is all the transactions are coming in. Each block is made up of smaller blocks, which are all transactions, and they're all competing by how much fee they pay to get in. The median fee right now to get into the next block is about $1.1024. You're going to be further back in blocks if you only want to pay 2 cents to get in. Sometimes the fees go up there's so much demand for block space to spend Bitcoin that the fees have gone up to like $70 if you want to spend your Bitcoin. It balances out, but it's literally a mechanism, and each block is made up of individual transactions. Look, this person is sending $96. Let's go. Like, and see, it's constantly moving and shifting by how much people are willing to pay to get into the block.
And it's showing what portion of Bitcoin they're using. Like this one is spending 0.00338960 Bitcoin.
Look, this one's sending 37 Bitcoin. So $3,700,000 about. They're paying $6 to send $3,700,000 without anyone being able to stop it.
Do you know what the wiring fee is for typical banks?
Usually $20. But the whole thing is, if you're wiring $1 billion, people are going to start asking you questions. The government's going to stop that wire and say, who are you wiring this to? Why are you wiring this? Tell us everything we need to know.
So that brings up the typical critique of Bitcoin, which I'm sure you'll be ready to address, which is the lack of, what's the term? Not censorship. What am I trying to say? Regulation.
Yeah, well, gold didn't have. You want the money out of man's hand because man's corrupt. So gold was an element created by God outside of man's hand that all countries set as their standard as a median of exchange.
Not all, though.
Not all.
The Chinese...
They got crushed, though.
The Chinese, yeah, they did. That's one of the things that they cite as being one of the reasons for,
all the big players.
Their loss in the 20th century is that China did not adopt the gold standard until I think it was the 1930s.
Yes. So all the big players, the major players, adopted money that was outside of the hands of human person or country. So it was a standard, because think about that, having a human being with the power to manipulate a money supply is like the One Ring in the Lord of the Rings. You're gonna abuse it. You're gonna be like, my precious, I think Gondor needs the ring. Gondor needs to manipulate the currency.
Well, Gondor answer, John.
Yeah, Gondor needs to set the interest rates.
Yeah.
Gondor needs to do, you see what I'm saying? Everyone thinks that they should control. So gold was outside of man's hands. It was set by, it was a god. God made gold. Same thing with Bitcoin, is the money needs to be outside of the hands of man, or else it will be used in a bad way, via corruption. Because, I mean, who wouldn't? If you have the ability to press a button and print yourself $1 million right now, would you press that button?
Fuck yeah.
Yeah, exactly.
Absolutely.
Like right here, right now, press this red button, $100 or $1 million cash comes out. No one sees it. You just get to store it in your house and you can do whatever you want with it.
Why wouldn't I? Of course.
Yeah, exactly. Same concept. Ultimate power ultimately corrupts. You need to bring the control of the money outside of the hands of man.
You need to, that's what, who'd you say the author was again of the Bitcoin standard?
Safedine Amos.
Yeah, that was his big, I guess, philosophical critique, is that any form of currency has to be completely separate from any interference by what he called an emperor. Because he was citing the Romans' coin clippings.
Exactly.
Which basically, it's the exact same thing as, the Fed printing $1 trillion, is that they would collect all of the currency, the gold coins that were printed, clip the edges of them, and melt them into new coins, inflating the value.
Okay, so what is...
Or I'm sorry, inflating the supply.
Yeah. What is mining? So you have miners and nodes. And 21 million Bitcoin exists. 2 million Satoshi's wallet. Legend. That's why I'm wearing this Japanese jacket today. Satoshi Nakamoto. He invented Bitcoin.
Pseudonym.
Mined 2 million of it to get it started because someone had to mine when he was the inventor. And then he's like George Washington. He went back to the farm, gave up the power, literally threw away the keys and disappeared. You can still see his wallet contains, he has like 2 million Bitcoin nearly or something like that. Dormant. Not used ever.
So what's that worth now? 20 billion? Is that what it would be? Am I doing that math right? Is that 2 million?
No, 2 million Bitcoin. Yeah, no, it's worth.
That's what I'm saying.
It's worth a lot. Yeah.
Oh, wait, it'd be more than that. 2 million times 100,000.
It could be 2 billion.
Oh, come on. Don't give me this bullshit. 2 to the power of 11. 200 billion.
200 billion, yeah.
Two.
So he's the richest, nearly the richest person on earth, pretty much.
He's about to be.
So yeah, 2 million lost to Satoshi, and then like 4 million lost because when Bitcoin was in its infant stage, where it was only worth like 30 cents a coin or something like that.
Yeah.
So many people had wallets, and wallets are secured by passwords essentially, which is made up of either 12 or 24 words, like grass, tree, dog, happy, church. You see what I'm saying? And it's a long, that's cryptography. When you put all those words together, it's a super long password essentially that no one can guess. Where when it was infantile and it wasn't worth a lot, so many people had wallets with negligent amounts, like, oh, it's $5 of Bitcoin, which was like 10,000 Bitcoin at that time. And they were just like, whatever. And they lost their keys and hardware and they forgot about it, not thinking it would ever be worth anything.
Yeah. And so that will never, in theory, be able to be recovered.
Recovered, yeah. Forever lost. And I think there's about 2 million Bitcoin, maybe 1 million around that can be mined left still. All the rest is dispersed amongst everywhere. Countries own it, individuals own it, etc. Yada, yada, yada. So what mining does is all a miner does is what it is there's a complex math problem that is each block, and the miners are all competing to solve the math problem, which secures the block onto the ledger, verifying the transactions. And for securing the block, they're rewarded the block reward. And right now it's like 3 Bitcoin.
3 Bitcoin?
Yeah, and the halving is every 4 years that gets cut in half. So right now, every single block, there's about 4 or 5 blocks per hour that get confirmed. And each person that confirms it gets 3 Bitcoin as a reward. See, Foundry just did one, Spider Pool, via Bitcoin.
How are they getting that much? I mean, that guy just got $300,000 then?
Those are pools, though. So what it is, it's you have a bunch of miners hooked up to Foundry Pool, and they get the 3 Bitcoin reward, and then it gets dispersed by how much power you're contributing.
Let's break it down then. How many miners would be typical for confirming one block? I mean, it's got to be thousands.
It's all the miners.
Oh, it's everyone.
It's all the miners are all expunging
across
energy
everywhere in the world.
Everywhere in the world to compete to solve the math problem.
How many then are there?
That'd be a perplexity thing.
Let's see.
Yeah, put how many miners, Bitcoin miners exist?
Didn't you do that at a point?
Kind of. I run a node which is separate from miners, and that's a whole...
You still have it?
More advanced. Yeah, it's running right there. That's it. Every time I spend Bitcoin, I literally transcode the transaction to my node so it's private. And then all the block miners and nodes in the world double verify it.
When you say miner, what it really is, it's a computer software running.
Yes, yeah.
Where is
so
that? What if I wanted to do that today? What would I do?
You need an ant miner or a specific piece of hardware that maximizes the problem solving ability.
I mean, is this like an NVIDIA chip?
It kind of is. It's a specialized chip that is specialized at solving this particular type of problem.
Didn't you use that when you had an NVIDIA chip?
I did in Ethereum for the NVIDIA chip, which was different. Might have to just refresh it. I think it's stuck in a glitch. Copy the... Let's see. Yeah, it is decentralized, so it's actually hard to get that number. I would say hundreds of thousands, though.
Okay. I still don't fully understand what you mean, though, how they're mining it today. Like, how are they, where is this reward of Bitcoin even coming from if these things are unmined? I don't understand.
It comes from the network itself. It's like,
so would it be from math. The code, the Bitcoin code itself rewards such that 3 Bitcoin will be issued per
each
block.
miner, the miners have Bitcoin address, and if they solve the problem, they're rewarded automatically by the mechanism of the system.
Okay.
It sends the Bitcoin to their wallet.
So then, okay, I'm starting to see. So then,
and the mechanism of Bitcoin is called proof of work, which is essentially what mining of gold is. It's you're expunging a certain amount of energy with a percentage of a chance that you will find gold and get rewarded.
Mm-hmm.
Does that make sense?
Yes.
So these computer softwares, think about this, the Bitcoin network, mining network, uses more energy than all the atomic warships of the U.S. sailing around the world constantly.
Wow.
That's how much energy is in this system. It's insane. More energy than all the supercomputers of Microsoft, Google, Tesla, Apple combined.
Wow.
That's how much energy. So what it is a miner is a chip, basically, that works at solving the problem, expunges a certain amount of energy with a certain percentage of a chance that you will solve it and get rewarded for solving it.
Would it then be...
And you're getting paid by the fees.
Yeah. So then theoretically, does it work out such that the more energy that I'm expunging, the greater the reward that I will get for Bitcoin?
Yeah, the more energy you have, the higher chance that you'll solve a problem and get rewarded for confirming a block on the blockchain.
Mm-hmm.
So you'll get more. And the big pools do a lot of the solving. Like Binance Pool just did one. Foundry's a big one. So Foundry will do they'll solve, because they have so many miners tapped into it, they'll solve like 20 of the blocks in the day or something like that. So yeah, the more energy you output, the more likely you are to solve the problem and get rewarded. So yeah. Basically, though, proof of work,
so they're almost competing to solve it.
Yes, yeah.
So that's what this is right here. This is the ones that won.
Mm-hmm. And all that is a block is a bunch of transactions of who sent what to who on the ledger. It's just a record on the ledger of this address sent this much to this address sent this much to this address. It's a track from the inception. The ledger is about, I'm downloading the blockchain right now. The ledger is like, on my node, the ledger is like 800 gigabytes of data. And it's every single transaction from the inception to now of who sent what to who.
Wow.
It keeps track of every single transaction from the very first transaction till now. So it knows who has what. And you can't just, that's how it's a mechanism. Like some person might skew the data on their node and say, hey, well, this person sent me 300 billion Bitcoin, so I have 300 billion Bitcoin, and they'll broadcast that to the network saying, I have 300 billion Bitcoin. But all the other nodes who don't have that go, oh, this is a bad actor, your information is wrong, blocked. Because they're all checking each other constantly to make sure everyone's on the same page of who sent what to who. All it is a ledger.
What then will happen when every Bitcoin has been mined?
See, good question. Yeah, you're asking all the questions that people ask when they start to understand. What it'll be is when all the Bitcoins mine, what will run the miners is the fees of the transactions. Because by that time, Bitcoin will be worth, say, $100 million per coin or $50 million per coin. So your transaction costs will be like, if you want to send Bitcoin, you're paying $50. See what I'm saying?
Yes.
So right now it's $1.34, $1.11 to send Bitcoin. In the future, when Bitcoin's worth 10 million per coin, it'll be like, no, if you want to transact on the Bitcoin network, the most pure, unstoppable network there is, you got to pay a premium.
But then how will that be effective as an actual form of currency? If I go to Starbucks and I want to pay in Bitcoin when it's universally adopted, I don't want to spend $50.
Yes, Bitcoin will become the SWIFT.
What do you mean the SWIFT?
The big dogs will own Bitcoin.
But okay, so that's what I'm saying. So then it will not be.
No.
It'll be used as a form of like high octane currency.
No. You'll have Venmo apps. You'll have Venmo, which will hold Bitcoin, a vast sum of Bitcoin, and they'll digitally have their own ledger where you're like, oh, I sent a little Bitcoin to Jerry for coffee.
And they're the ones taking the
They're
fee.
the one actually spending the transaction on the network.
I see what you're saying.
You see what I'm saying? Yeah.
Yes. And so then, okay, yeah, I see it. But
And
then
why
if you
it's
wanted to, if I was in Tokyo and you were in California and I wanted to send $1 billion to buy this yacht or whatever, then I would just go, does it work such that I could just go directly to memepool.space and type in, this is what, like, how am I actually paying Bitcoin to anybody? If I actually want to give you from your direct account to my, or vice versa, to pay in Bitcoin, where am I doing that? Where am I paying?
You would have to actually have a Bitcoin wallet that has the ability to do that. That goes more into complicated. There is something called the Lightning Network too.
Okay, what are all these people doing? Where are
They're
they sending
spending on the Bitcoin blockchain right now.
But how are they doing that?
So right now, I could send you $100 billion and only pay $1.11 to do it.
Yes.
Yeah.
But how would you do that? Theoretically, how would you pay me in actual, real, raw Bitcoin?
You would have
not using Coinbase or anything like that.
You would have to send it on the there. So there's just like there's decentralized Bitcoin wallets. It's like Linux compared to Mac and Windows. So it actually the transaction broadcasts to the actual network. Whereas Coinbase, you're just settling their digital numbers, and they're the ones actually sending Bitcoin on their end.
They're a third party. They're the middle ground.
That's why
they're the bank sending the dollars.
Yes. Yeah. That's why I say if you own Bitcoin, you want to get a self-custody wallet and actually own the Bitcoin yourself. Because if you own a bunch of Bitcoin on Robinhood or Coinbase, it's like the bank with the gold in the vault. They could go
They're
bankrupt.
just issuing you a paper note
Bitcoin.
saying that, we have your Bitcoin.
Yes.
I see what you're saying. Where it'd be the same concept if you want to buy gold, you don't buy a bank statement saying that you have gold. You want to actually own gold in your safe.
Okay. Yes.
But then that's the problem with gold is that if I want to pay you in gold, I have to take it out of my safe, put it in my truck, drive to your house if it's in Germany or wherever, and actually here's my gold now. Whereas Bitcoin, I could do all of that directly through the blockchain.
Yes, I can zap you.
Can you show me where that would work? Like, is there a website that I could go to right now to do that?
Go to Bitcoin. I think it's .org is the Bitcoin.org. Yeah, get started with Bitcoin. Choose your wallet. It'll go to choose your wallet. Scroll down. Let me see if I can let the audience see this too. It'll ask you, hit next. It'll ask you, what do you want, a mobile wallet, a desktop wallet? Hardware wallet is the best. So if you're going to do this, I recommend this, but you can get an app. So hit Apple. Next. New users. Yeah, you'll be a new user. Just say...
I think it makes me do this.
Go down. Next.
Fees.
Doesn't matter. Yeah, just hit next. Just go down and hit next. You're good. Yeah, so those are iOS wallets. You
should do it so the audience can see.
Well, yeah, I mean, I got to resize it. But basically, there's wallets where you actually have the Bitcoin, but it's more complicated.
BitPay.
That goes into more complicated things. So we'll skip that for now. I'll tell you about that after the podcast. Well,
it's more for just the sake of curiosity right now.
Yeah, You can, though, and that's what you want to do, is you want to own your own Bitcoin. You don't want Coinbase or Robinhood to hold it, because if they go bankrupt, then they could be like, sorry, we actually issued more paper Bitcoin than we actually had physical Bitcoin in our possession.
Mm-hmm.
And therefore you could lose your Bitcoin.
Isn't that exactly what happened with FTX?
Yes.
Yeah.
Yes. And Mount Gov, or whatever that big one was. But anyway, so yeah, now we'll go into Michael Saylor, who MicroStrategy, basically he's a big fortune company. He's like number in the 90s, top 90 company in the world right now. What he's doing basically is he's leveraging the power of being a legit company on the stock exchange, where he can actually borrow billions of dollars at very low to no rate. Whereas an individual, you cannot right now go borrow $20 billion at a 1% interest rate.
Or zero.
Yeah, or zero, which he's getting.
Mm-hmm.
So he's leveraging basically the power of being a company on the stock exchange to borrow as much debt as possible and buy Bitcoin. One of the most popular memes of Bitcoin is him going, there is no second best. He was getting frustrated because people are like, well, what about Dogecoin? What about Ethereum? Blah, blah, blah.
Why though?
The best
Why?
crypto asset? Well, Bitcoin's the best crypto asset.
Watch.
What's the second best? There is no second best. There is no second best crypto asset. There's a crypto asset. It's called Bitcoin, right? Right? There's no second best. Okay. It's not like Google and Facebook. It's not like Apple and Amazon. Yeah. We can debate Apple or Amazon. What's better? They both look like tech monopolies to me. They both look pretty good. On the other end, Bitcoin or no. Bitcoin. Bitcoin's crypto asset. This entire idea of like 60% dominance is bullshit, ridiculous, stupid, right? Like, it's stupid. It's not 60% dominant. It's like 96% or 95% dominant, right? The thing, if you compare it as a crypto asset to a like kind of proof of work crypto network, right? That's meant to be a store of value. You know, you're lucky if you can scrape together 5% of other stuff in the last bucket. So there is no real competitor.
Yeah.
Why though?
Why though what?
Why is there no other competitor? What gives Bitcoin the advantage over everything else?
Because Bitcoin solved the problem, and you can't resolve the problem again. So Ethereum...
Why couldn't somebody just copy their exact code?
It has been done, but it does not have the genesis of Bitcoin, where Bitcoin naturally spread around the world because it flew under the radar. So it naturally blossomed where the coins got distributed pretty evenly because it was under the radar. Not many people knew about it, and it kept spreading slowly. It got more popular. It was a natural spread. It has the lore, the mythos. Satoshi Nakamoto, like George Washington, walked away from the fame, the power, like could be the richest person in the world right now, threw it away.
Compare and contrast Bitcoin to Ethereum.
Yeah, so Ethereum was originally proof of work mechanism. That's how it worked. You mined proof of work style. And it had some extra stuff like smart contracts, yada, yada. Long story short, Ethereum realized it could not beat Bitcoin and what Bitcoin does because it literally solved the problem and it does it best.
Mm-hmm.
And so they change the way it works from proof of work to proof of stake, which is like what the traditional finance system is right now. Whoever has the most money deposited in the banks gets paid interest, kind of thing.
Explain proof of stake, though. What does that mean?
It means you lock up the network secured by people who lock up the money. So it's like if you have $10,000, by the bank. Same thing as the bank, basically. So now it's like, oh, well, now you have like Solana, which is another blockchain that is faster than Ethereum and is centralized. Basically, it's more centralized. It's like, oh, Solana does it better. So Ethereum can't beat Bitcoin at what it does best, being decentralized, proof of work, currency run on energy. And it can't beat the best centralized blockchain, Solana, which is what everyone's doing the meme coins on right now. So it's basically Ethereum against Bitcoin. Ethereum has been falling off bad. If you go like USD Bitcoin,
Yeah.
you do Bitcoin Ethereum, down. Ethereum's been getting crushed because it's stuck in between. It's not the best on one end. It's not the best on the other end.
I think Trump said that with the cryptocurrency U.S. reserve that they were going to be buying Ethereum as well.
Sure, I mean, whatever.
But at that point, it's almost like they're just
People
using
don't
it as an
understand.
investment.
People don't understand why Bitcoin is amazing because you have to go into the technology. A lot of people do understand that, though.
Mm-hmm.
That's why Bitcoin's dominant. It's because people understand that. So then let's see this. This is Michael Saylor just gave a presentation to Microsoft whether they should put Bitcoin on their balance sheet instead of leaking billions of their dollars to inflation. And they only gave him 3 minutes to present to the Microsoft board of directors. And this is what he did.
Microsoft can't afford to miss the next technology wave, and Bitcoin is that wave. Bitcoin represents the greatest digital transformation of the 21st century. It represents digital capital. The global wealth is distributed across assets that provide utility and others that preserve capital. But risk is destroying trillions of dollars of that capital every single year. And investors are turning to digital capital in the form of Bitcoin in order to avoid that risk. Digital capital is economically and technically superior to physical capital, and it represents a revolutionary advance in capital preservation. The asset class itself is growing from trillions to hundreds of trillions of dollars, and it is backed by digital power along with political and economic power. It makes sense for Microsoft to be powered by digital capital. Bitcoin's the best asset you can own. The numbers speak for themselves. It makes a lot more sense to buy Bitcoin than to buy your own stock back or to hold Bitcoin rather than holding bonds. If you're going to outperform, you're going to need Bitcoin. And those bonds are undermining your options market and your equity liquidity. Luckily, you have an alternative. Public support for Bitcoin is surging, as is political support, as is support for the U.S. Bitcoin Strategic Reserve, as is Wall Street support. And the President of the United States says,
never sell your Bitcoin.
That's why we're entering year one of the crypto renaissance. And you have a choice to make. Cling to the past or embrace the future. Divest billions of dollars and slow your growth rate. Invest billions of dollars and accelerate your growth rate. You've surrendered hundreds of billions of dollars of capital over the past 5 years, and you've just amplified the risks that your own shareholders face. If you want to escape that vicious cycle, you're going to need an asset without counterparty risk. What if you could buy a $100 billion company growing faster than Microsoft for 1x revenue? What if you could keep doing it every single year? It's time for Microsoft to evaluate its Bitcoin strategic options. We've created an open source model. You can plug in your own assumptions. You can convert your cash flows and your dividends and your buybacks and your debt into Bitcoin. If you do that, you'll add hundreds of dollars to the stock price. You can create trillions of dollars of enterprise value. You can strip away risk from your shareholders, and you can prosper on the Bitcoin standard. So do the right thing for the world and adopt Bitcoin.
When are they voting on that?
So he fit hours of information in 3 minutes. Like it was like a record almost. Like it's like 3 slides per 1.4 seconds.
Yeah.
And he said this is a plan that he did this for Microsoft, but this is really for all the companies.
Mm-hmm.
Like all the companies look at this presentation, read each slide slowly, and make your choice. Now, the next video, this is the one we want to watch. Any questions before we go in this one? This is the one that explains a lot more everything, and this will connect a lot of dots about
Before we
Bitcoin.
go, I got to take a leak.
Yeah, no problem. No problem. I'm going to stand up too. Yeah, it's a live stream. We can do that. We'll be right back in 2 seconds. Close that door, Gert.
Yeah, it is. I feel like I should bring my guitar here or something.
Yeah.
Just be fiddling.
Okay, let's get into it. So, and the wallet that people use, the base wallet, or the thing that runs Bitcoin as a software, is called Bitcoin Core. And so that's what miners, node runners have to download Bitcoin Core, and Bitcoin Core comes with a send and receive wallet in the software running the Bitcoin software. I'll explain all that. I mean, you could do multiple episodes.
Yo, dude, I'm still on camera. Boom.
Yeah, yeah.
Just stand up for a second.
You could do multiple episodes about Bitcoin. Like, we can continue, like, okay, explain specifically this.
Yeah, go for it.
You're still on. Yeah, look at that. It's funny. Okay, so yeah, this is the big one.
Bitcoin revolution. No more delay. I want to talk about the Bitcoin revolution. And I also want to talk about rebuilding our global economy with digital.
This is the premium Garmin Duffel 45
no,
liter
sorry.
We need to get YouTube
It's a
Premium.
transforming
Sorry,
2-in-1
audience. We will be
travel
getting
duffel
YouTube
bag for long
Premium
weekend.
soon.
Capital. The world,
Yeah, go to our
as
Patreon
we
if you
know
want to
it,
help fund our YouTube
based
Premium
on
class.
20th century ideas and 20th century technology. Stocks trade
Honestly, should
9:30
almost
to
get a
4
Patreon.
unless there's a bank holiday. You can't do things on the weekend. Everything is slow. Everything is expensive.
That's true.
If we want to prosper in the 21st century, we need new ideas, and they need to be based on new technology. This chart you've seen before, I've popped it up. It's $900 trillion of global wealth. It's that $900 trillion, it's spread across
Could you full
physical
screen it?
assets and financial assets
I don't
that
know
are
what it'll do on the
20th
live stream.
century
Let's see.
ideas,
Pause it real quick.
20th century.
Let me pull up our live stream on the app and see what it does when we full screen it, because I don't want it to mess it up or the
Well, yeah, of
audience
course.
can't see it. But let's see. We can see. Yeah, it does mess it up.
Damn.
We'll have to figure that out.
Okay.
Technology. And in the upper left corner is a little orange blip, the little orange asset that could, what we call Bitcoin. It's 1 trillion. It seems like a lot if you started with 0, but when you look at it against the greater scheme of things in the world, it's 0.1%.
That's Bitcoin
I see
right
it.
there, yeah.
Here's another way to see that same chart. It's not 900 trillion of assets. It's a bunch of assets held for their utility value and a bunch of assets held as a store of value, long-term capital. When I buy a house, I want to live in it. But when I buy a bunch of bonds, I just put my money there because I didn't know what else to do with the money. And when you start to see the world as a big chunk of long-term capital, $450 trillion or more of capital, and you start to think about the way we store that capital, you see the engine for the revolution. The global economy struggles because we're relying upon imperfect assets and imperfect systems to store that capital. It's crippling our capital preservation. So how do we engineer a better system? Well, this is Tesla, and Tesla had a quote. He said, you want to understand the universe, think in terms of energy, frequency, and vibration. I'm going to translate that. I'm going to talk about the physics of money now. What are the physics of money? Energy is money, or capital, or wealth. You could use them interchangeably for this speech. Frequency is about the duration or the lifespan. How long will it take? A minute, an hour, a year, a century? And we vibrate money every time we trade with each other, or we transfer from one locale to another, or we transform a property into another type of asset. And so here is an important equation. This is useful life is equal to the value of an asset divided by the cost to maintain that asset. If you're looking for the useful life of your money in an asset, then the way to figure it out is ask, how much does it cost every year to maintain that asset in pristine condition? What do I have to spend in order to avoid depreciation or decay?
That's the big thing with housing.
It turns out that useful life, is very close to something we know in the Bitcoin community as stock to flow. They're very related if you're measuring them in years. Many individuals and most corporations, they use financial assets to preserve capital. And this is the source of a challenge for us. Let's talk about financial assets. I want to keep my money for a long period of time. Start with $1 billion, put it in the peso, and the money is decaying in 2 years, right? A 98% inflation rate strips you of your economic energy or your capital. This is not a good long-duration asset.
Wait, read that out. Pause it. Inflation 96% over the past 4 years in Argentina.
98.
It says 98?
Yeah. Or wait.
Wow.
Yeah, 98.
Holy shit.
Yeah.
Turkish lira, your capital lasts 3 years.
48% Turkish lira.
Lord have mercy.
The US dollar, under traditional monetary inflation for the past century, might last 14 years, but it's not like you have it for 14 years. The life is being sucked out of you linearly over the 14 years. Put your money in a hedge fund. What's the annual cost? It's 2% management fee and then 20% of the upside. About 4% a year if you're investing in normal assets. That means it's a 25-year asset. Treasuries, you're going to get a yield, but the 3.5% after-tax yield goes against the 7% monetary inflation. Maybe your money lasts 30 years. Capital in a mutual fund where you pay a 1% fee, 100 years. That's about the best you're going to get. If you manage to buy a diversified portfolio at 10 basis points, the counterparty risk is going to drive you to a 1% cost. So those are your financial assets. We're running the world on a 20th century set of ideas, and on average, a financial asset is going to last you 30 years. We all know inflation dilutes the value of financial assets. But inflation is just the tip of the iceberg. You're also going to get diluted by tariffs and tolls and torts and transfers, taxes. We got all sorts of taxes, income tax, capital gains tax. Every time you vibrate and move the money, you get taxed on the money. And then if the taxes don't take you and the torts don't undo you, you've got weather and competition and obsolescence and politics and catastrophe. Those are the things that dilute the...
Is there a way right now that if I owned my actual Bitcoin, like hard in my physical Bitcoin wallet, and then I transferred that on the blockchain, or somebody paid me in Bitcoin, is there any way for that actual Bitcoin to be taxed right now as a capital gain?
They would tax you through extortion. So theoretically, what would happen is, yes, if you move your money, if you buy your money through a centralized exchange, It's a KYC exchange, know your customer. It's a law that the U.S. puts upon exchanges where you have to submit your ID to the exchange in order to move the Bitcoin. So they know who owns the Bitcoin, where it moves to the address. So where you bought your Bitcoin from Robinhood or Coinbase or whatever, they would know this is
Well, obviously that's different. Robinhood and Coinbase. I'm saying if you're using, directly through the blockchain. Say if I bought...
Well, you can send from Robinhood and Coinbase to the blockchain, then start moving that money
I understand
around.
that, but what I'm saying is that if you have Bitcoin on your physical wallet right here, you bought it...
And I sent you Bitcoin directly to you.
Let's say it like this. It was 1 year ago.
I have anonymous Bitcoin.
Yeah, no.
Some of it.
So let's say that. If you bought it 1 year ago at, what would that be, 30,000? Something like that? $30,000 is what one Bitcoin would be worth. Today it's worth $100,000. And I moved that value into something else. Basically, with that appreciation, is there any way for that to be taxed for capital gains?
If you spend it, no. If you buy a car with it, the U.S. government might say, where did you get this money to buy this car from? Sold this Bitcoin. Did you pay tax on that? You see what I'm saying? Like the government could essentially throw you in jail. They won't get your Bitcoin because it's secured by 24 words, but they could throw you in jail for not paying taxes or something like that. That's
so right now, the U.S. government treats Bitcoin as an asset.
If they know you have, it's the same thing as gold under the mattress.
Yeah.
If you have non-KYC Bitcoin, anonymous Bitcoin, the government doesn't know when you spend it, and you can spend it tax-free. Who cares? If you have KYC Bitcoin that's been moved through an exchange and you're moving that, the government knows this is Garrett's wallet address. It moved here, and they'll go, you owe tax on this. And you could say, I'm not paying it. And they couldn't seize your Bitcoin, but they could throw you in jail, kind of thing.
Tax evasion.
Yeah. Exactly.
Okay.
The value of your capital over time, and if you want to maintain economic...
You could run away to Ecuador or El Salvador if they say issue an arrest warrant and live your days out and spend Bitcoin.
Yeah, I wonder if they have
El Salvador has
gains.
no capital gains tax on Bitcoin.
But it's also El Salvador.
It's registered currency.
Economic energy, you have to fight against that friction.
Trump is talking about getting rid of capital gains tax on Bitcoin too. He said that. So we'll see. Hopefully that'd be great. I will never sell my Bitcoin though. What I will do is Bitcoin will become worth so much that you will take a loan out tax-free against your Bitcoin using Bitcoin as collateral so it doesn't create a tax event if you need spending cash. Same Michael Saylor, never sell it.
That's a frustrating endeavor and it's a no-win endeavor.
This is great, huh?
They give up on financial assets and they start turning to physical assets to preserve capital. Well, here's the physical asset, a Ferrari. Not a good way to keep your money forever, though, because after 5 years, you've spent as much on the insurance and the upkeep and the depreciation
fuel,
as it's worth.
Storage, maintenance, tax.
Yachts aren't much better. If you spend 10% of your money operating it, you also get hit with depreciation. Don't store your money in yachts. A home in Miami Beach, if you buy a $10 million house, you better come up with $10 million to maintain the house over 17 years. Now you've got no money left. Silver, 22 years. A warehouse, 40 years, maybe 50 years. Bar of gold, 62 years. A painting, 72 years. Land.
Yeah, look, so it says real quick.
A painting.
Gold, annual dilution of 1.6%, taxes, transport, and storage risk reduce the life further.
72 years. Land. The average property tax in the United States is 1.1%. That means your money is going to last 91 years unless the government reassesses the value of your property. Then it's going to last less than 91 years. The oldest family ranch in the United States is King Ranch. They made it 173 years. Every other family in the country failed. And here's the longest held property, the Crown Estate in the United Kingdom. You could say the royal family held it since 1066, but on the other hand, it passed from the Plantagenets to the Stuarts through the Lancasters and the Yorks and eventually found its way to the Hanover family. And so maybe 7 different families split that. none of them got to take it with them. So physical assets you might think might last 1,000 years, probably about 50 to 75 years is the best you're going to do. Entropy is diluting the value of your physical assets. It's sucking the capital, the energy out of them. There's a reason it's called Earth and not heaven. Because politicians are very creative. They got a city tax, a county tax, a state tax, a federal tax, a transfer tax, a usage tax on the property. And if that doesn't get you, there's rent control, price control, or a culture shock. Then you got competition. You might get discriminated against. There's recession. The currency can collapse. Your tenants won't pay you. Someone will slip and fall on the front sidewalk and sue you. There's weather, war, crime, and catastrophe. And if energy prices go through the roof, it's going to be hard for you to make a go of it. Physical capital is not a simple solution. Something I learned at MIT. The 3 laws of thermodynamics. You can't win. You can't break even. But you can't get out of the game. So you could stop right here and be a little bit depressed. But then again, we don't want to lose. So you start thinking, what if we could find a way out of the game? Then we could break even.
All AI-generated art.
Then you could win. Satoshi found a way.
Pause. No, that's what they're doing. Pause for applause.
He gave it away. And he went away. And that's Bitcoin. Bitcoin is
Pause it.
Digital.
Satoshi is a pseudonym for an unknown individual, is it not?
Yes.
So we still, to this day, there's no idea of who it is.
There's general concepts between a group of like 5 to 10 people, but no one knows who it singularly is.
It's like anonymous.
Like Hal Finley received the first Bitcoin transaction from Satoshi Nakamoto.
How Finley?
Yeah, he's a guy, a famous guy, worked with Satoshi. He probably knew exactly who Satoshi was. He's dead now, though.
Capital.
Stuff like that.
That's what he created.
Hi, Spencer Raskoff, co-founder
Oh,
of
no.
Lord,
where when I'm
have
not working,
mercy.
I teach a course
YouTube
on
Premium.
entrepreneurship.
Jeezum.
Bitcoin's immortal, immutable, and immaterial capital. And I use that in this sense. It's got an infinite lifespan. It's not being attacked by the forces of weather and entropy and inflation. It's immaterial in the sense that it's not in the physical world. It's not suffering from all of those parade of horribles that are the scourge of financial and physical assets.
Pause it again.
And it is this.
Before we go further, how, if somebody was going to, if you were to steel man the other side of the argument against Bitcoin, what would the strongest argument be against it?
It basically, the purity of it relies upon the code of the software. And if you were to convince a majority of the population through illusion by fooling them to change the code, you could theoretically bring down the whole system.
How could that happen, though?
Could happen.
How could somebody change the code?
Because guess what? One of the amendments to put income tax in the United States, you had to ratify a certain amount of states in the U.S. to pass the amendment to establish income tax.
Mm-hmm.
And it did pass. A majority of the states passed the amendment. They say there was some tomfoolery there because why would anyone in the country vote, yes, I want to give up my money to an income tax?
Well, that was during World War I. It was the same thing of like when you go, on the causeway, the bridge in New Orleans, they said that the toll was only going to pay for the construction of the bridge.
Same thing,
and then
No, and there's a lot of states where people have gone to their record keeping and say, I want to see the actual tallies of who voted for this. And they're like, we don't have the record anymore. It's lost.
Yeah. But no. Who would have the ability to change the code? How is that possible? if Satoshi
it's
Nakamura,
consensus. All the nodes in the world would have to agree, and it has been done. That's what hard forks are, soft forks. That's a whole other episode. That's a whole episode in and of itself. That goes into the blockchain wars, stuff like that.
yeah, with what is it, BTC? What's the other one? The
Bitcoin Cash and stuff like that. Yeah,
isn't that what happened?
Yeah,
that somebody wanted to change the code.
Yeah, there was a battle of I think that this is the real Bitcoin. No, I think this is the real Bitcoin. Okay, well, there's going to be a split. And
that's like worthless now, isn't it?
Well, yeah, everyone, if you own Bitcoin on the Bitcoin blockchain, when the split happened, you also all of a sudden owned Bitcoin on the Bitcoin Cash blockchain. But then the voting mechanism, everyone went with this Bitcoin and left that Bitcoin. So
I want to look up what that's worth today.
Bitcoin Cash.
Yes. $602. Over the past 5 years, it's up 181%. So not shit in comparison.
Yeah. And
who would still have this?
And people doubled their Bitcoin supply because the safe thing would be to hold both to see which side wins. But a lot of people sold.
Won.
One side already did win, but right when it happens, you don't know who's the winner and who's not.
Sure.
Who's actually right. And then a lot of people knew that the standard Bitcoin blockchain knew this is the correct philosophy. So they immediately sold all their Bitcoin Cash and doubled their Bitcoin size. So people pray today, please let there be another hard fork so I can double my position. Just sell all the false coin, get more Bitcoin. Okay.
Solution to our economic dilemma. The transformation of our capital from financial and physical assets to digital assets, it solves the problem that we're all facing. Now, how long-lived is Bitcoin? Well, take your Bitcoin and put it at scale with a custodian, an institutional-grade custodian. You pay 10 basis points. By the first law of money, that means you're going to last 1,000 years. The custodian might not last 1,000 years, but that doesn't matter because you can move the Bitcoin every year or every decade, and you can stay one step ahead of the custodians failing. You can't teleport a building. You can't.
Wait. What do they mean, the
King
custodians?
Ranch.
Like a professional custodian
so
service bound by law that
is
secures
thing
your
that you can
Bitcoin.
move.
Like a bank,
Say
essentially.
you custody your Bitcoin. You can self-custody your Bitcoin for about 1 basis point a year, assuming you buy good hardware wallets and signing devices and spend a day a year to keep track of it. Now you've got a 10,000-year asset.
Pause it.
And what happens if you give
The other concern would be that if you have your Bitcoin on a physical wallet, I mean, obviously you could lose the wallet, but also the degradation of the technology itself over time.
The wallet isn't the actual Bitcoin, though.
What is it?
Your Bitcoin is 24 words. So the wallet is just the mechanism to send and receive the Bitcoin.
Where is it then? Where does it exist? On the blockchain?
Yes.
Okay.
And
so then theoretically it would be impossible to lose it.
I'm going to do it really fast, okay? Bitcoin is like an XYZ graph coordinate where you have more points on the graph than there are stars in the universe. And you selecting a wallet, the 24 words, is like you taking a micro needle and pointing to one spot on the infinite star map. And that's your corner. You just claim that corner. The chances of someone else in the world claiming that exact same corner that you claimed is infinitesimal. Like, I think the Big Bang has like a better chance than that happening or something like that.
Wow.
Basically. So like, you're not creating a wallet. Like, I'm creating my space on the blockchain. All you're doing is taking your finger and pointing at a spot in the universe, and the chances
where this Bitcoin exists.
And the chances of someone doing the exact same thing and finding your secret cove, or like Count in Monte Cristo cove.
That would be a good story.
Yeah.
Like somebody, like a mass genius hacker, like being able to solve that's the enigma. Solving the infinitesimal code.
Yeah. So it's like the Count of Monte Cristo, like you're you're finding a spot to hide your gold where no one else can find it. Same thing. You're pointing to a spot on the map. That's where you're going to store your Bitcoin. And the chances of someone going to that exact same spot where you're storing your Bitcoin are like so small, like
Impossible
nearly. Yeah.
Give it to the AI. Well, an AI or a computer program can maintain those private keys for the cost of electricity. You've got a 100,000-year asset. The AIs are going to want the Bitcoin. If they have a choice between owning the Bitcoin and owning the ranch in Texas, or owning the bar of gold, or owning the Argentine peso, it's pretty obvious what they're going to want, and you can see here why they're going to want it. Digital assets are in a class all their own. When you compare them to all the other assets that you can use for capital preservation, you can see they're off the scale. Everything else is living in the domain of 30, 40, 50 years, and you're in the domain of 1,000 to 100,000 years. It's a breakthrough in capital preservation, but it makes it a revolution in economics. If you would be rich, trade wisely. And here's a very simple principle. Trade temporary for permanent. Trade your ice cream cone that's melting for the peso for the dollar for the land, and the land for the Bitcoin. Trade the currency for capital. Trade something fragile for something resilient. Trade something local for something global. Trade something physical for something digital. Trade the security for the commodity. Trade the commodity for the scarcity. You can't go wrong moving in that direction.
Let me ask you this.
So let's talk about
Pause
some
it.
great trades in history.
So the way that Bitcoin exists is it's being run by every computer in the world that's mining, which may be in the millions, right?
Yeah,
okay.
yeah.
So let's say, this is a thought experiment more than anything possible.
Just saying, though, that this is a whole podcast in itself, because you're going into the nitty gritty.
No. Just quick question.
Yeah.
In theory, EMP went off in New York City, basically every computer across the world was wiped out, except for, say, 100 of them that were currently running the software. Would it even be theoretically possible?
Yeah, the whole network would freeze, and as soon as one person pulled up the network again, it would start running again. They've also figured out how to transfer Bitcoin over radio waves.
What?
Yeah, exactly.
The fuck is that?
Yeah. Like,
What does that mean?
They've figured out how to transfer Bitcoin over Morse.
Dude, shut the fuck up.
Oh, yeah. Over Morse code.
That's crazy.
Like think you could just tap like certain ones and zeros
and ones, yeah.
basically, and transfer the Bitcoin. So
Who
it's
figured that out?
yeah.
$1
Just look into
trade.
it. Yeah. Some great trades in history.
The Dutch understood naval power. They understood ships. They had thousands of them. They bought the best port in the New World for a couple of $100 in plastic and textile trinkets. And that's worth $2.5 trillion today. Okay?
Surprised it's not more than that.
It was an investment that's returned 6% for 398 years straight. It's a 10.5 billion X return. And if you think about it, you're like, why would I actually give up the best port in America for a bunch of textiles and plastic and glass? But the people that sold the thing to them didn't understand naval power. If you don't appreciate the reason you're going to want the property, you won't value the property. Napoleon wanted to gallivant across the old world, and Jefferson wanted to expand in the new world. So France sells Louisiana to the U.S. for $15 million in 1803. The $15 million probably lasted a few months fueling the French army. It's gone. Jefferson got that. He got 27% of the United States. It's an 800,000x return. Worth 12 trillion or more. It'll be worth more. Jefferson had some vision, as did this man. Seward pays $7 million for Alaska 2 years after the country's decimated by the Civil War. John D. Rockefeller is trying to start an oil company. Today, there's $1 trillion of oil underneath Alaska. It's a massive return for a piece of paper. How much is digital capital worth? Take the $450 trillion, multiply by 3%. That's your entropy cost or your inflation cost. It costs the world $13.5 billion a year
Trillion.
to take all of those parade of horribles when they're trying to preserve their wealth. If you put a 20 P to E on it, like you'd value a company or a long duration bond, that's worth $270 trillion. So digital capital is worth 10, 20, 15 trillion a year, and it's worth hundreds of trillions of dollars. Reality check. Is he full of BS? Well, digital capital is returning 55% for the past 4 years. Financial capital, the best in the world, is the bond. It's minus 5%. Imagine capitalizing your company or your country on a minus 5% instead of a plus 55%. It's obviously working. And now let's come back to my chart here. Global wealth, we can look at it like this, and we see the little Bitcoin, square in the left corner. But what's happening? Here's my macro Bitcoin forecast. It's 21 years. Goes out to the year 2045. What do I think will happen? Well, I've got a bear case and a bull case, but what I think will happen is that 55% ARR goes to 50%, 45, 40, 35, 30, 25, 20. It's between 50 and 20. It'll gradually decelerate till it's growing about twice as fast as the S&P index.
Pause it.
And
when was this?
This was about 4 months ago.
4 months ago.
Yes.
In which Bitcoin was valued at 65,000.
Yes.
Today it just hit 100.
Mm-hmm. Woo.
That rate, Bitcoin's $13 million a coin in the year 2045. 13 million. It could be a 3 million bear case. It could be a 49 million bull case. But what is Bitcoin? 7% of the world's assets then. What about the rest of the assets? Well, I actually think that AIs and technology are going to revolutionize tech. We had no companies worth $1 trillion. Then we had a bunch of $1 trillion companies. You're going to see more because you're going to see companies with 100,000 AIs and no employees, and they're going to do the work of companies that used to have 100,000 employees. You're going to see mega corps develop, shipping robots and self-driving cars, and a company that gives a personal physician to 1 billion people without any doctors on the payroll. So clearly, equity is going to grow fast. Gold's going to get demonetized. Land will be less monetized. But look, here's the future in 2045. Doesn't look that revolutionary. It looks like today. It's just that Bitcoin is visible on the chart to you. When Bitcoin is visible, that's going to be the base case. Now, what are the implications of this?
Why is everyone spiraling
Oh
over
my
YouTube banning ad
gosh.
blockers? Like, chill, guys. Just use
Disgusting.
Pi. It's a free Chrome extension.
Horrible.
How do you make money? Well, let's talk about individual Bitcoin strategy. What should you do? Make Bitcoin your primary treasury asset. Convert your excess earnings to Bitcoin. Utilize subsidized credit. If the government will loan you money, borrow the money at cheap rates and buy Bitcoin, and find a tax-efficient way to invest the Bitcoin. What shouldn't you do? Don't quit your day job. Don't lose your focus on Bitcoin. Don't use margin loans and trade with leverage. You get wiped out while you're asleep on a Saturday night. That's not good. Good? 30-year loan for 3% backed by the government on your land. Bad? Overnight 10x leverage. So what's typical person? Well, we actually model an individual, and we said, what if you had 750,000 in net assets, and you made 200 grand a year, and you're going to make 5% more every year, and you got a savings rate of 25%, and you can invest 50,000 a year. Well, there's a lot of strategies. You could be the normie and do a normal strategy, diversified portfolio. You can be a 10%er, and you can put 10% of your assets into Bitcoin. You can be a BTC maxi and put 80% of your assets and put 80% of your earnings into Bitcoin.
Maxi. Dude, that's you, John.
Yeah.
You could be a double maxi And that's when you basically take an extra $250,000 loan against the house. And then the triple maxi
not a
is
good
you
idea.
finance the house
Yeah.
for Bitcoin, you buy Bitcoin, you flip all your assets to Bitcoin, and then you move to a cheap tax jurisdiction where you actually can avoid some taxes and invest an extra 50 grand in Bitcoin, maybe a Singapore or UAE or something. What's the result? Well, this is the result. The normie ends up with $8 million in 21 years. The 10%er will more than double that. The maxi ends up with 100 million. The double maxi 150, the triple maxi 214 million. You can see the power of leverage, and the choice is yours. And you can also see, you know, it takes 15.9 Bitcoin to be a triple maxi.
That, though, is a
You know,
horrible like financial strategy.
Well, yeah, he's saying not. He said don't play with leverage because you'll probably get wiped out on Saturday.
Yeah.
But he said the choice is yours, meaning, you know, if you want to do it, this is what you could happen.
6.25 Bitcoin will make you a wealthy person. Let's talk about corporations. Dues. Convert your capital to BTC. Convert your cash flows to BTC. Issue equity to buy BTC when it's accretive. Issue debt to buy BTC when it's accretive. Don'ts. Don't bleed your capital with taxable dividends. Don't surrender your capital with stock buybacks. Don't dilute your shareholders with risky, overpriced M&A activity. Here's our typical corporation.
Acquisitions?
$100 million of cash flow, $1 billion of enterprise value. It's growing. It's generating a lot of cash flow. Its share price is $100. And now the issue is, what's your strategy? Normie, maxi, double maxi, triple maxi. Well, the normie's going to be okay. You'll have a $1,200 stock price, but just 10% allocation doubles it. The maxi is going to nearly 8x it. The double maxi is $17,000 stock. The triple maxi is $28,000. What kind of company do you want to run? Reality check. This is a triple maxi strategy at work right now. This is MicroStrategy. It will be 48
Put money where his
months
mouth
on
is.
August 10th of this year since we started down this road. 48 months.
That's even higher
And
now.
Yeah, way higher.
you know, if
Yeah.
you're running a company, and there's 300 million companies out there, if you're running a company and you think you can do what Microsoft and Apple and Google do, then good for you. You can get to a 20 to 25% ARR. If you want to copy NVIDIA, you will beat everybody. But I think that right now in the boardrooms of Microsoft and Apple and Google and Tesla, they're stressed out about copying NVIDIA. And the irony is, it's easy to copy MicroStrategy. I just gave you the playbook. It's simple.
All you got to do is be a triple maxi.
This
That's
is how
some
it compounds
dude.
over
That's some
4 years.
fucking cojones to be a
Right?
triple
4
maxi.
years of doing that.
Yeah, they're
gets you
saying
to
he's got, like, the biggest balls.
1300%
No
Out
doubt.
of everybody.
improvement.
It takes it though. It's
So-
risky, but it takes daring
Bottom line,
to chart new
build a
waters.
strong capital structure,
beat
avoid
NVIDIA.
dilutive financial practices. Let's talk about an institution. You got a church, a charity, an endowment of Harvard, you know, any nonprofit. What should you do? Modify your charter to invest in BTC. Reallocate from short-term duration assets to long-duration assets. You know, you wouldn't invest in ice cream cones. Don't invest in the peso. But why are you holding 20-year financial instruments? Don't own 50-year physical land instruments. Buy a 1,000-year instrument. Use BTC.
Definitely don't invest in
BTC is the cost of
Argentinian
capital,
pesos.
Yeah.
not the S&P.
Certified.
The S&P is
Makes me almost want to go to
13%,
Argentina.
BTC is 55%.
Just ball out.
Yeah.
Right? Think of 55%. That's your cost of capital. And then use intelligent leverage Okay, here's our model, a $1 billion portfolio. You want to be a normie, a maxi, a triple maxi. Here, at the maxi, we just said put 100% in at the double maxi, and triple maxi is take 10% leverage. And that's what happens. You start with $1 billion, and in 21 years, you'll have $5 billion of your normie, and you'll be patting yourself on the back, talking about what a good job you've done managing the endowment. But it could have been 300 billion. It could have been 100x. Not that hard, very straightforward. Now let's talk about wealth of nations. This is the interesting one. What's the national Bitcoin strategy? Do's and don'ts. Well, reallocate your treasury from gold and bonds, they're short duration assets, to a 10,000-year asset. Issue currency to buy Bitcoin, issue debt to buy the Bitcoin, encourage Bitcoin ownership with favorable laws, protect self-custody for individuals and corporations, and support integration with the banking system of your country. Those are all do's. The don't pursue policies hostile to Bitcoin and Bitcoin holders. This one's not complicated. Now, let's say you're an indebted country. You're actually in debt. You're running a deficit. I could name these countries, but I won't. I'm just going to say you owe a lot of money and you're struggling, your interest rates are high, and you don't know what to do. Well, here's your strategies. Are you a normie or a 10%er or a maxi, double maxi, or triple maxi? The maxi is you put a third of your treasury into this. A double maxi is 65%. And a triple maxi is put all your treasury into it and start issuing debt. For those of you who can actually read, right, the subtext of this is the first country to buy Bitcoin by issuing its own currency wins. This is simple. You print paper. Remember that Seward check? You issue the check. You'd be like, well, you know, you could whine. Oh, we couldn't afford it. You know, it was 2 years after the Civil War. The country was bankrupt. Millions of people are dead. The South is in disrepair. The North is angry. And this guy, Seward, comes up with an idea to buy frozen tundra, a lot of it, from a bunch of Russians that wanted the paper. Okay? So people have done things under worse situations. But you can see here the normie strategy is you owe $3 trillion. You're not getting anywhere. The maxi strategy pays off your debt. The double maxi strategy makes you rich. The triple maxi strategy makes you very rich. Why? Because you're buying the property that everybody is running to in 100 years, and you just go buy it now. Like, Standard Oil was nothing. There was no gasoline. There were no automobiles. We had no diesel locomotives in 1867. We invented all that stuff, but common sense says, oh, I can buy something that's equal to about 1/5 of the size of the nation for a few dollars. Why don't I just grab it? Bitcoin strategy for wealthy foreign countries. Let's say you have a lot of money. You know, maybe you're Saudi Arabia or Norway, and you make a lot of money. Well, what's your strategy? You want to be a normie, a maxi, a double maxi?
Triple maxi.
A maxi puts 25% of their money into Bitcoin.
Dude, nobody's going to be a fucking
a triple maxi goes
except for Michael
75%
Saylor.
Except for Michael
and
Saylor.
converts their surpluses into Bitcoin.
Yeah. El
Here's
Salvador
what
might be a
happens.
triple
You just
maxi,
get
I think.
insanely rich.
Maybe.
$58 trillion of rich. But, you know, more than that, this strengthens your national security because you end up with $50 trillion or more of digital capital nobody can take. You know, they can't steal it, right? They bomb your country. They invade your border. They're not getting the Bitcoin, right? So this is good for your financial security and your national security. But note, if you are Saudi Arabia or Norway, and if you pursue the triple maxi strategy, Saylor says it's very easy to do, but it's 4.2 million Bitcoin you end up with at the end of that line. That means there's not a lot of room for triple maxis, not at the nation state level, right? There's going to be one, there might be two. At some point, right, this is an opportunity for an aggressive mover. You can have a lot of triple maxi families and a lot of triple maxi corporations, not a lot of room for triple maxi nations. And let's look at the U.S. U.S. is a special case. Well, the rules are still the same, right? Buy Bitcoin, sell the paper, get rid of your gold, go long range. And the don'ts are still the same. Don't harass the Bitcoiners. Don't send the industry overseas. Don't send the capital overseas. But
Wait.
What's our base case here? Well, we think that AI and new technology is going to drive growth.
Pause it. The reason why Bitcoin hit 100,000 a day is because of Trump's SEC pick, right?
No, that was 2 days ago.
Is that not
It
correlated?
it was maybe that Putin said that Bitcoin's unstoppable. Jerome Powell said that Bitcoin's directly competing with gold, not the U.S. dollar, which is a good thing.
Mm-hmm.
Slew of things.
Well, I'm trying to find exactly what Trump's Bitcoin strategy is going to be. I know that he intends to make a stockpile of it.
Yeah,
I'm going to assume that the United States is going to be run by competent executives, and they're going to harness technology, and we're going to actually take advantage of AI, and we're going to create robot cars and robots and billion-person websites that give you free accounting and legal and medical advice, and all that's going to grow our revenues faster than grows our expenses, and we'll eventually get to the point where interest rates come down. But the question is, what's the United States Bitcoin strategy? And we could be normies. You could be a 10%er. That's kind of like buying
as well.
500,000 Bitcoin. You could buy 1 million Bitcoin. A double maxi is 2 million Bitcoin. A triple maxi is buy 4 million Bitcoin. And then start sweeping the surplus of the nation when it comes into Bitcoin. And the consequences? Well, if you're a normie, if you're a normie and you have great productivity growth and brilliant technology and the robots do all the work for us, you're still going to be in debt. It just won't get much worse. I mean, that'll save us. We need that. If you're a maxi, you'll pay off half the debt. If you're a double maxi, you got a surplus. And if you're a triple maxi, instead of owing 30 trillion, the nation has 30 trillion. Right? Bitcoin is not the solution to all our problems. It is the solution to half our problems. And the important point is, the other half are very complicated. They'll take a lot of people and energy. This half is simple. This is a very simple thing to solve half our problems. So,
You can pause it too.
Wait, let me just get through this ad.
Bitcoin.
Based on the proposed legislation introduced by Senator Cynthia Lumens, known as the Bitcoin Act of 2024, Trump's administration intends to purchase a significant amount of Bitcoin for the strategic reserve. The plan is to buy 200,000 Bitcoins each year for 5 years. Total acquisition of 1 million Bitcoins over a 5-year period, which would come out to 5% of the total global supply of Bitcoin.
So that was what? That was right now we're just at Bitcoin maxi.
Which would also be
triple.
which would also be though he's also planning to vastly essentially make it easier for Bitcoin regulation.
Mm-hmm.
You can go.
Okay.
And is cyber Manhattan. Hundreds of trillions of dollars of capital are going to go there. We're going to demonetize Russian tundra and Chinese real estate and everything in Africa and all of the crappy buildings. Everything anybody bought that they didn't need, it's getting demonetized. You buy a Bitcoin, you owe a building. Otherwise, a boulevard. Otherwise, the entire neighborhood. It's only 276 to the third. That's what you're looking at right now. And I'm going to leave you with one quote. Satoshi Nakamoto kicked off the Bitcoin network January 3rd, 2009. On January 17th of 2009, 14 days later, 16 months before Pizza Day, when Bitcoin was worth nothing, and it was not going to be worth anything for a year, Satoshi Nakamoto said it might make sense just to get some in case it catches on. If enough people think the same way, it becomes a self-fulfilling prophecy. And never have wiser words been spoken. You're staring at $1 trillion of proof, but there's still 1,000x to come, and you have a lot more information at your fingertips. The writing is on the wall. Bitcoin is the future of capital. It's the future of money. It might make sense to get some because it has caught on. Thank you.
That was it.
Experts suggest that a U.S. Bitcoin reserve could push Bitcoin's price towards the upper limits of analyst forecasts, with some predicting Bitcoin could reach $500,000 over the next 5 years.
Yep. That's why it might make sense to get some.
Yeah.
It's one of the things. I mean,
It's a very interesting
NVIDIA
point.
too. Sure.
Well, yeah, it's a very interesting point that he's making, that if this actually does become the Bitcoin standard and that nations adopt it as their reserve policy, then there is only a limited supply. Essentially, by your calculations, 2 million minus 4 million or plus 4. So there's 15 million Bitcoin that exist to be publicly traded.
Yes.
And so if one nation does buy 4 million Bitcoin, they would essentially own almost a third, a little over a quarter of all the Bitcoin that exist. And then the question becomes, well, then how do they utilize it?
Yeah. Or if you have a company that goes triple maxi.
Yeah, true. Like MicroStrategy.
Yeah.
What is their exact plan? Like, is there an end date?
What? For MicroStrategy?
Yeah.
Basically to acquire as much Bitcoin for cheap as possible.
Forever.
Forever, yeah, pretty much forever. I mean, there'll come a point, but I mean, if Bitcoin's going to 500,000 in 5 years, he's trying to get I want another $40 billion loan at 0%. Bitcoin. I want to. You see him saying he's trying to pile in. Right now, his average is 51, or something like that. Yeah, I think it's 51.
How much Bitcoin does he own?
I think it's close to like 400,000 right now.
Who's the biggest Bitcoin holder?
Satoshi Nakamoto.
Obviously, but besides him.
Look it up. Probably an entity.
Let's see.
Yeah, it's saying
MicroStrategy.
that's old. That's old. And there's Binance. Yeah, El Salvador, even though they've gone full on Bitcoin standard, they're a poor country to begin with. They don't have that much Bitcoin, even though they've gone like all in.
How much does
It's
El
funny
Salvador
too.
own?
People ask like Chinese representative, like, what happens if Bitcoin becomes the world's reserve standard? And they're like, the world will end. That's what they said. Because really, the U.S. could hit it the hardest.
El Salvador owns 6,000. Dude, poor El Salvador.
Yeah. See, they didn't have much to start off. Like their currency,
I bet they're feeling pretty good today, though.
they are. Yeah. They're like, 100 times up their whole country. But they started off with like their currency was devaluing at like 200% a year, something ridiculous. They were like poverty.
Hyper inflation.
Yeah.
That's so funny, man. El Salvador might become a nice place.
So think,
Dude, if they own 6,000 and then Bitcoin went to 500K, they'd be like, yeah, we're doing all right.
Yeah, we're doing all right.
Don't worry about El Salvador. We're
I think
okay.
MicroStrategy, 400,000 Bitcoin. Right now, MicroStrategy owns 2% of all the Bitcoin in the world.
So if it hit 500,000, then MicroStrategy would be worth 200 billion in 5 years,
In
if that actually
cash.
happens. Yeah, in U.S. cash.
And
What it would be
Bitcoin-
worth would
Yeah,
be 400,000 Bitcoin.
Yeah.
Yeah.
But they plan they're shooting for like 1 million Bitcoin. They're Michael Saylor,
Well, he's already on pace. He
He's
owns
like
400,000.
Yeah, he's like I'm going for all the Bitcoin. Mofos.
Yeah, I saw it on PBD's podcast. He said that he was like, yeah, if we do this by, I think it was 25 years, then MicroStrategy, based on his calculations, would be worth 10 trillion or 25 trillion, something like that. Which is so crazy too, because like he made that point, it was the biggest deal in the world whenever Apple hit $1 trillion valuation, and then like 3 years later it hit 2 trillion.
Yeah.
And then now Nvidia's at basically 3.5 trillion.
Yeah.
So a $10 trillion company is, 5 years away maybe.
Yeah, it hit it took a company 100+ years to hit 1 trillion, and then it took 2-3 years to hit 2 trillion.
Exactly.
That's it. You can see inflation right there.
Yeah, exactly. You can. That's interesting.
You might want to own some Bitcoin. It might be worth it.
Well, at this point,
I think that's good for the stream, though. You think we're done?
yeah, I think so.
I'm pretty gassed.
Let's see can we see how many people were looking? At all?
On which site?
It doesn't matter. Damn, that was 2 hours. It's good.
Shoot. I don't know.
Some
We have to
people would
see
say
post.
some people would say that's pussy shit. Like
2
2
hours.
hours.
Yeah.
Where do you you just started or something?
Yeah. Okay, I'm stopping it.